We are still getting used to the changes laid out in the new Tax Cuts and Jobs Act and wondering how it will impact our financial future. One area we want to delve in today is estate planning.
Jim Heafner is the president of Heafner Financial and is a certified financial planner. He joins us every Wednesday to help us get financially fit. Jim, good morning. It's great to see you.
Good morning. Great to see you.
All right, so let's talk about estate planning.
Yes.
What exactly is it and why is it important?
Well, most of us think about estate planning, I think, as what the wealthy do to avoid estate taxes. But really, estate planning is something we all should do to make a transfer of our wealth when we're no longer here, simple, easy, and efficient. Right? So some simple things we want to do is, most of us want to avoid probate. And that means not using your will. It means having a beneficiary on all your IRAs and 401ks and 403bs. It means having beneficiaries, or what's called PODs, pay on death clauses, on your bank accounts. And TODs, transfer on death clauses, on your brokerage accounts. Or holding joint accounts as joint right of survivorship, not joint tenants in common.
No, the new tax law is going to double the tax exemption, estate tax exemption. How does that affect the retirees and pre-retirees?
Well, the first thing is, what does an exemption mean? And what it means is that you're only taxed for estate tax purposes on the amount of your wealth above that exemption. So the doubling went from 5.5 million to 11 million for individuals and 11 million to 22 million for couples. So it didn't apply to everyone.
Yeah, and so it really affects those people who are billionaires. That really affects people in that multi-million. Well, the ordinary person, you're okay.
That's right. But remember, that's all the tax law changes for corporations were made permanent.
Yes.
For individuals were made temporary. They expire in 8 years. So unless you plan to die in 8 years, you might need to look at what was the exemption, not what is currently. Now, what that means is you do have 8 years to do some real planning. If you're going to be a target for estate taxes, you have a higher threshold to be giving money away or moving to other assets, to other trusts and so forth.
Okay. What about the income tax aspects of estate planning? How has the new law changed?
Well, because the estate tax applies to only the really wealthy, and because it is so easy to avoid, I mean, if you pay estate taxes, you have not been paying attention.
You haven't been paying attention, right?
Because there's a really easy way to get around that. But we all have to deal with income taxes, so that's relevant to everybody. Now, because most of us will pay less income tax over the next 8 years, beyond that, we don't know, it's maybe a good opportunity to start doing planning to move your assets so that you're planning to avoid or minimize taxes after the 8 years for the rest of your life and your children's lives.
Okay, so what are some practical steps that we can take now to help us in the future, and we're talking about estate planning?
Well, the first thing is you want to meet with a financial planner or a CPA who really knows their stuff, who understands the green lights, we call them, the opportunities in the tax code.